You know how difficult it is to explain a treasury bond? Like a treasury and bonds, they're all saying the same thing, where it's like a treasury is something that the feds print out of thin air at like a set amount. Like say that they need to make a $1 billion treasury, and so they print $1 billion fiat, basically, because it's not even like USD yet. They print this treasury bond, they label it as a treasury, and then they sell it to the banks. So like the bank needs $1 billion, so then they buy that $1 billion treasury bond from the feds with interest. So they take a loan out with the feds, so then now it becomes debt. I mean, the moment they printed this treasury bond out of thin air, it was debt. And then now the bank bought this treasury bond and converted it into USD for us to borrow. So now we go and borrow borrowed money, because the bank still has to pay that loan back. And then we borrow that borrowed money and then have to pay that back. So it's this crazy loop of fake money. And there's never any realness to the money. And then the bonds that people invest in, those are treasuries. That's why they're called treasury bonds. So you're basically buying the fiat that the feds print. And that is actually a mouthful. It's really, really difficult to explain that type of stuff. It's hard to teach that stuff. So to add to that, with the bonds that are being printed out of thin air, these treasury bonds that the feds are printing, they're printing these bonds with an expectation to have to pay that back. So they're printing their own loan. So they're printing these treasury bonds with an interest for themselves. And then they sell it to the banks, who also have interest on that. And then that gets sold to us. That also has interest. And so it's a loan on a loan on a loan, and then everyone is supposed to waterfall that back up to pay that off. And then when you buy these bonds, like these investment bonds, and you're lucky if you get 3% interest on those bonds, when you think about it, if they're printing so much of these treasuries, they're devaluing it every single time that they print it. So the real inflation is like 8%. So if your bond is devaluing by 8% a year, but you're only gaining 3% yield on that investment, you're losing by 5%. So it just doesn't make any sense. So treasury bond to fiat is the same thing. And then you have the banks buy that treasury bond, which automatically converts it into USD, the US dollar, which then because we have access to USD, and then we have to, pay that back. So to add to the treasury bond discussion, the Federal Reserve has total control over the interest rate in which they borrow or make these treasuries. And it trickles down. So they control that number. So it's like, are they borrowing money that's expensive, or are they borrowing money that's cheap? And right now it's kind of expensive, and they're on the way down the interest curve, meaning that they're dropping the interest rate so that the money that they print is cheaper to borrow, and they're not obligated to pay it back as much. I mean, they've gone as far as having 0% interest, or like 0.01% interest on money that they just print out of thin air. The treasury bonds that they print out of thin air. They have total control over that. And so the lower it is, the easier it is to borrow money. And the lower it is, the more people want to borrow money, which means the more money finds hard assets, like Bitcoin. One last thing, and if you're paying attention, Federal Reserve Chairman Jerome Powell is talking about cutting rates. And cutting rates means cheaper money, like cheaper treasury bonds. So they're going to print lots more treasury bonds because it'll be cheaper. And so the money printer speeds up during low rates and it slows down during high rates because they want the cheapest money possible. And it's called quantitative easing, is when they let up on the interest rate. So interest rate goes down, they print more because it's cheaper. And the more they print, the higher we go. But the downside is that the more debased USD gets, the less and less your dollar will buy you over time. All right, that's it. I gotta go. I needed to add something else about stablecoins. So if you're not familiar with cryptocurrency, a stablecoin is something that's one-to-one backed by an official USD. So a stablecoin company has to purchase a treasury bond or US dollars. You know, they purchase these bonds and then they convert their USD into cryptocurrency, and it's backed one-to-one. So these stablecoins are buying these Fed treasury bonds, and then what they do is they generate yield from having that stablecoin, and then they buy Bitcoin with that. So what's happening right now in the system that we live in behind the scenes is that these stablecoin companies are teaming up with the Feds and treasury bonds, and they buy these bonds because it's expensive right now and nobody's really wanting to buy these bonds, but stablecoins are buying these bonds because they need a surplus of this USD to back their stablecoin one-to-one because it's cryptocurrency. It's not an investment, it's just a digital dollar. And what happens is they generate this yield, or they get this interest back from having these treasuries, and then what do they do with that interest? They roll it back into their Bitcoin treasury. So these stablecoin companies are using USD yield to buy Bitcoin, and so these companies have Bitcoin treasuries and reserves to back up their dollars. And it's huge because there's like 5 major stable coins right now that are doing this, and one of them is XRP. Donald Trump has a stable coin. USDC is one. Tether is another one, and there's more. They're just stablecoin companies that are buying treasury bonds and rotating profits and yield into Bitcoin. And that's the new system. That's just what's happening right now. And it's worth studying. And then the last thing I want to add, while it's on my mind, it's always on my mind, is that we're looking at Bitcoin in such a weird way. Like, people don't understand what Bitcoin really is, and they ask the question, or they say Bitcoin is too expensive, but what are you comparing it to? Are you comparing it to the old price of Bitcoin? Like, compared to 2012, Bitcoin is expensive, but compared to, like, when? Compared to 20 years from now, 10 years from now, 5 years from now, 20, 30, the price of Bitcoin is relative, and it shouldn't even be valued in USD, because one Bitcoin is always going to equal one Bitcoin. And so is today's $100,000 Bitcoin expensive? When I compare to the future of the potential price of Bitcoin, my answer is no. My answer is no. But when you compare Bitcoin to the price of what it was in 2010, yeah, sure. I mean, sure, it's expensive. But that's the when. I compare today's Bitcoin price to the future price of Bitcoin. And there's only 21 million Bitcoin, and a lot of those are lost. A lot of those are being hodled for long term. Institutions are buying more Bitcoin than there are being mined. And you're never ever going to get rid of Bitcoin because of the network. And I'm going into more detail than I was originally going to, but the Bitcoin network is run by what's called a node, and that's just technology that you plug into your computer. And as long as you're running a node, you're part of the network. And there's hundreds of thousands of nodes all around the world. And so in order to disrupt Bitcoin's network, you need to hack every single one of those at the same exact time, which is literally impossible. The only thing that really comes close is maybe quantum computing, but that's, in the future, and by that time we'll have technology in place and advancements in technology, and quantum computing preventative measures will have been taken by the time that's even possible. So it's not going anywhere. The only place it's going is up, and stablecoins know it, institutions know it. I was just gonna say, and I'm just a pleb. It's like what we call people like retail investors. I'm a retail investor. I just see the market. I understand what's going on with Bitcoin and institutions. I see what's happening with the financial shift in the economy. I see the weakening of the dollar. I see the massive amounts of ridiculous printing that they're doing with these treasury bonds, and understand that it's devaluing my purchasing power. My paycheck is not going to buy me the same amount of goods to next year that it will today. It's just what it is. It's just what's happening, and stable coins are balancing that out. Stable coins will be the avenue to elongate the power of the dollar. It'll prolong it. It'll prolong the dollar's ability to be the number one traded currency in the world. But behind the scenes, it will be backed by digital gold, which is Bitcoin, because these stable coins will have Bitcoin treasuries on lock, and Bitcoin will not slow down. So here's the thing that I really need to wrap this up. But Bitcoin is a fighter, so it will fight for its life, because as the dollar and Bitcoin fight for position, which it's actually stabling out as adoption and Bitcoin becomes a broader subject globally, it will even itself out. It will get less volatile, but we want volatility to the upside. Like Bitcoin's volatile in a 4-year time horizon to the downside, but overall, Bitcoin's not gonna continue going down over time. It's gonna continue going up over time, and that's volatility to the upside. Fiat, treasury bonds, the money they print, USD, the dollar, that's volatile to the downside. And so there's the big difference. Bitcoin is scarce. It's volatile to the upside. It has its periods of time over, 2-year periods, a year and a half periods where Bitcoin is going down. We're almost to that season of time. So you have to be careful. You have to understand what you're buying. You don't just ape into these investments thinking that you know everything. You have to do the work and study and put the time in. Otherwise, you're going to buy the top of the market and you're going to lose your money, and you're going to panic because you're going to sell. Okay? And when we sell because we're scared, we lose. We didn't have the mental ability to stay in the market long term, and we can't play the game, because you can play both games. Long-term Bitcoiners say never sell, hodl forever. Short-term Bitcoiners sell their Bitcoin back into fiat, and they're buying the volatility to the downside and giving up their volatility to the upside. It's as simple as that, and you can play both games. I'm gonna end up taking my profits so I can lock away some gains to be able to rebuy Bitcoin in the bear market. I love your smile. I love your laugh. So Bitcoin will end up going down again in the next bear market. It's gonna happen, and I will have already taken my profits because I'm playing the game. I'm taking some off the table. I'm gonna leave some Bitcoin in the market. I'm gonna hold my Bitcoin sovereignly to myself, and I'm gonna also take some profits. I'm gonna take some profits from my altcoins, and I'm gonna hold on to that through the bear market through 2026, and at the beginning of 2027, when the bear market is at its lowest or around there, because no one can time the market, I'm gonna buy more cheaper Bitcoin. That's the opportunity, and that's what I wanted to share. So here we are, long video, but I gotta go.